Okay, hold on to start. Okay. Good evening, everybody. You're welcome to this week's Forex Outlook with Great White FX. Can you see my screen?
Yeah.
Okay. Okay, so you're welcome to this week's Forex review with Great White FX. So, as always, we're going to start off with the economic calendar. Monday, the markets might be very calm on Monday. That's during the New York session as we have US bank holiday. Wednesday and Thursday seems to be the major events going into next week for the US dollar and most likely any other currency. We have FOMC meeting minutes. Okay, these FOMC meeting minutes on Wednesday. Okay, but the major news is on Thursday. These FOMC meeting minutes. So the major news is on Thursday, which will be CPI. So with that out of the way, let's go into the charts and see what we have going into this new week. So we're going to start off with NASDAQ, dollar index, Euro USD, GBPUSD, gold, EURGBP, and pound yen and Euro yen. So as always, let's start off with looking at the weekly. If we look at the weekly on the dollar index, we can see that basically price is still in an uptrend on the weekly. Price is still basically in an uptrend on the weekly. If we go down to the daily, that's sorry, US 100. Sorry, US 100. On the daily, we can see what looks like an equal low here. You can see it, price is setting up a bullish formation, which will be a retracement into this leg from the excuse me, from this point high to this point low. That's from, let me use something to annotate it, from this point high, sorry, from 15,627 to this low at 14,435. So this is like a retracement. And if we look at price now, price is currently within this daily bearish fair value gap. So if we go into the 4-hour time frame, we can basically see that there's a break above 14,903, and price is currently at a fair value gap. So we might see a bit of a retracement going into this new week. And if we're looking at a retracement, we'll be looking at price to come down within 14,784. That's a drop within this area and a continuation back to the upside on price. Because we already have a change of character above 14,805 and a break of structure at 14,903. So going into this new week, any retracement might be an opportunity for a continuation in the retracement, because doesn't mean that this has reversed. It just means that there's a short-term low here and we might see a retracement to probably this structure point here. If this area fails to hold price, then we might be looking at this higher fair value gap here on the US 100. So short term on the US 100, we're looking at a bullish situation going into the new week. So on the dollar index, we're going to start off with the weekly. If we look at the dollar index on the weekly, this is still basically bullish. This is still basically bullish. As we can see, we have a close above 105.88. We can see basically this is still basically bullish. If we move up to the daily time frame, it's still bullish on the daily time frame. It's still bullish on the daily time frame. We're just in a retracement of this 11-week rally. This 11-week continuous movement to one direction. That's what we have on the dollar index. We're currently in a retracement. And if we go down to the 4-hour time frame, we can see what we have on the 4-hour time frame. We can see we have a bearish situation on the 4-hour time frame. The situation remains slightly, this is a retracement. On the 4-hour, you're going to have a complete reversal once you have a close below 105.65. So going into this new week, given this massive rejection and this bearish candle formation on the 4-hour, any retracement on this pair will be an opportunity for a short down to 105.65 first, then this volume imbalance here on the 4-hour. So that's what we have on the dollar index. The dollar index, we have a short-term corrective bearish move in play. The reversal will be complete once we go below 105.65. The next we're going to be looking at is the EURUSD. Looking at the EURUSD, let's start off from the weekly. What do we have on the weekly? And see that this pair is bearish. And just basically see the formation on the weekly is still bearish. Price has taken buy side below 105.21 and closed back. If we go into the daily,
Sell side.
sorry, sell side. Sorry, price has taken sell side and closed back. If we go into the daily, you'll see that we're in it's kind of a retracement on this pair. Overall trend on this pair is still down. Order flow long term is still down on this pair, but we have a short-term low at 104.44. I have a short-term low here in play. If we go down to the 4-hour time frame, we can still see that it's still looking bearish. Price didn't close above 106.61, 06.17, didn't close above it. So given this type of formation, we'll be waiting to see what price does within this this bullish order block. If we drop down a little bit to the 1-hour time frame, you'll be watching these fair value gaps for possible long opportunity on this EURUSD. So basically, you can pick your fib from 104.83 to 1.600, then look for the midpoint and look for long opportunity from that area on this pair, on the EURUSD. We're in a retracement, not that this pair has reversed, but if we get a close, a good close above 106.17, then we're looking at a completion of a 4-hour bullish breaker. It's not yet complete, but until we get a significant close above this level, then it will be complete. So going into the new week, we're looking at possible bullish run on the EURUSD. The next one we're going to be looking at is GBPUSD. Let's start off from the weekly. We'll start off from the weekly. This pair is, you can see it's in a retracement of 1.1803 to 1.3142. If we look at the candle formations, we have a massive rejection out of this fair value gap on the weekly. If we move down to the daily, you can see that this pair is still down. Order flow on this pair is still down. Hello, excuse me a minute, please. Hello.
Yeah.
Hello. Okay. So if we notice, price didn't close above 22.74. Didn't close above it. Because if it had done that, we would then have a complete bullish breaker. So going into this new week, already, we can see the bullish formation taking place. We have a market structure shift above 1.2174, and this is a 4-hour time frame. So if we pull back our candles, we see price has retraced, but it didn't close above this high. So going into Monday, I'll prefer a retracement, not a rally. If it retraces, then that will give you a good buying opportunity within this bullish order block, first targeting 22.71, then this 4-hour fair value gap here. So that's what we have on the pound dollar going into the new week. Then next we're going to be looking at is gold. Hello, can you guys still hear me?
Yes.
Okay, so we're going to start off gold on the weekly. Gold on the weekly, we can say that there's an impulse down, bearish impulse down on the weekly time frame. Price did not sweep 105, 1805 or 1804 on some brokers. Price didn't sweep it. If we go down to the daily time frame and see that the impulse is still down on the daily time frame, price came few pips within this and there is a correction. Now, going into this new week, this has given this candle formation on the weekly. We're looking at a slightly bullish situation on gold. But whenever price comes to a significant level and turns away from it, it's always reason for concern. Why? They can get people buying here, and what do? Drop it down here, because anybody buying here, their stop is going to be below here. So going into this new week, we'll be watching to see that this other block, that this last down candle before this up move, you'll be watching it to see if price drops in there and holds. If it holds in price, then you'll be targeting all this fair value gap above price as possible take profit targets for the coming week, because this is the impulse on this is still down. Price has taken liquidity twice. If you look at it, price has swept liquidity twice on this, below here, then this 1 point again. So 1, 2, 2 points. So there's a possibility it might still sweep the 10th time and still go, but that will depend on what price does within this last up close candle. So cautious longs going into the new week. Then the next we're going to be looking at is EURGBP. Looking at EURGBP, EURGBP is in a range. If you look at it from the weekly space, looking like he wants to rally, but he hasn't done much. He hasn't done much. He hasn't been able to close above 87.02. There's been no good close above 87.02. So this most likely is at its range high. And if you look to the left, there is a bearish order block here. There's a bearish order block here. So that's where price is within the moment. Price has not been able to break above it. Let me see if I can put in my annotations. I don't think I have it annotated, but if you look at it, this candle here might be on some brokers. You can notice that price has failed to close below it. So once we get a close below 86.50, if we go to close below 86.50, then that will mean that this decline from this bearish order block has resumed. But for now, the low of this bearish order block is being used as price for a support. So if we go down now to the daily time frame, we can see that price, just like I was saying, price didn't close well above this. So it's currently in a retracement, but it has been ranging. It has been ranging. So if we go to the 4-hour time frame, looking at this pair, this is what we have on this pair. I'm of the opinion that it might try to rally and see if it can sweep this high. But as long as it stays below 87.06, this pair might still move to the downside. We might see it coming into this area. As you can see, we have a breaker. There's a bearish breaker here, and it's still in play. This bearish breaker is still in play on the 4-hour time frame. So that's what we need to be noteful of. So the next we're going to be looking at is pound yen. Looking at the pound yen, from the weekly, this is still bullish. And see, price just did a retracement of this point, this 17.04 to this high at 18.6.84. We'll put in our candles, you can see a very, very strong rejection from that point. So if we go into the daily time frame, the possibility that this might continue its up move is still there. The possibility that this might continue its up move is still there. If we go down to the 4-hour time frame, I wouldn't want to see it rally first into 183. I'll prefer to see it retrace. Then that would give 183 as first target, 83.49, then 184.39. But if it sweeps here, then we might see a steep retracement before a continuation to the upside on this pair, on this pound yen 4-hour. But for this pair, going into this new week, this price is still tilted to the upside. Then the next we're going to be looking at is Euro Yen. Looking at Euro Yen, let's start from the weekly. If we look at this pair from the week, the same setup, it's still bullish. We might assume that the retracement of this impulse leg is ending with this massive rejection here. If we go down to the 4-hour time frame, we can basically see it taking shape to the daily. So going into the 4-hour time frame on this pair, I'll prefer a retracement. Then you can see all these almost equal highs. This will be your first target. Basically, your first target on this pair will be 158.79. Why? Whenever you have highs like this, stacked below a fair value gap, price is going to go to the fair value gap. Because everybody who is selling, they are going to have their stops, maybe 10 to 15 pips above it. So if this retraces, you're going to be going in for 158.6. To be on a
sound is breaking.
It's breaking. I said, whenever you have highs like this, lined up like this, price is normally going to sweep into a fair value gap above it. So the best play on this pair is to wait for a retracement. Once you get that retracement and a confirmation continuation, your first target is going to be 158.47, 158.65, 158.79, then the equilibrium of this point, then maybe 159.18. That's what we have here. And if you look at this pair, there is a range. There's a range here.
Yeah.
This 4-hour candle. There's a range here. I don't know if it works on yen, but it works very well on gold. So this is what you would do from this high. I don't know if it will work on yen, but I've seen it work very well on gold. You project this to the top. So you see if this continues to run, 159.91 should be your exit price for your long trade on this pair. So that settles. Yes. Hello. Any questions? Yes, go ahead.
Question, yes. But assuming this euro yen at the beginning of the week clears the liquidity on top.
Then you fade the trade. It doesn't mean that you short. You look for bearish opportunity to now drop into this fair value gap area. Do you get me?
Yeah.
That's why I said if you notice, I said it on the yen. If you look at the pound yen, the pound yen is closer to his high than the euro is to his swing high. Do you get?
Yes.
The pound yen, I don't know why he didn't sweep it. So if it's to continue bullish, I don't want it to sweep first. Okay. Except it sweeps with momentum. There's a kind of move you will see above that high. you will not, don't try to fade it. Don't try to short it. What you just be waiting for is a retracement and a continuation. That's why I was saying that I would prefer they don't spike the high. To keep the bully, I'll just prefer a little retracement and a continuation to the upside. So is there any question? Anybody who want me to look at before we call it the night? So in the absence of that, let us remind ourselves Wednesday and Thursday is going to be very, very interesting. So let us be well aware. Let us be well aware that, and you know that during CPI, always remember CPI is two move based. What do I mean by that? If you're looking at a pair during CPI, it starts to drop. If that pair has a bullish bias, if you cannot scalp that short, when I mean scalp that short, you cannot, because sometimes the move will be very fast. Maybe you are short before then. Watch for any significant low, because if this is, you know, like I said, the yen pairs are bullish.
Yes.
Like I said, the yen pairs are bullish. So now, assuming you're looking at this during CPI and this starts to drop, just leave them. 1 hour after this, the real move is going to start. So if it rallies, the real move is going to be down in most cases. If it drops, the real move is going to be up in most cases. So are we clear?
Yes.
So you just need to be aware of that so you don't get trapped, because remember that was what they did on dollar index on Friday.
Yes.
This was the news. This was a non-farm payroll. Do you see the major move? That was at 8 o'clock. By 8:39, this was the real move. So expect something like this going into Thursday. So
for all the currencies or what?
I would say anything USD and gold.
USD.
USD, gold, and to an extent yen pairs. I don't trade yen pairs, so I can't say for them. But I know gold and anything gold, anything dollar based and indices. You can see it. The same thing happened to on the indices. You can see it. Do you see the massive drop? Then the original move started. It happened on the yen pairs. It happened on the yen pairs. Do you see it? Massive drop. And then a continuation. So when you're seeing this, don't
Show us gold. Show us gold.
Let me see gold. Let me see gold. Where is gold? Let me go to my 1 hour. I'll see clearly. This was gold. This was a drop. Do you see it? Man, this was the move.
We're going back. Okay.
I remember there was one group I was in. So I was telling somebody that this is going up. The person said it's a false rally, that the person is selling. It's going to be very painful because this move from down here to up here is 220 pips.
Wow.
So whenever you're looking at a pair and you see a pair spike a low and close back, don't short that pair. Do not short that pair. That was the first warning. Anybody watching it, immediately it did this and closed back. Don't short that pair. It's going to go to the other side because they've taken liquidity here, external. Internal is going to be where? Here. So that settles it. I hope as the week goes by, I will update on the chart movement, and because you might plan something, the market might not go according to your plan. So you need to adjust as the market makes it available. So, but for this gold, I'll prefer a retracement. I'll prefer a retracement first.
before
before a
continuation.
continuation. I prefer retracement because why? This fair value gap. If you look at this fair value gap here, it has held price. If you notice, this is the first time price is closing above it. So it's going to act as what you call an inversion fair value gap. So price must not close back below 1824. Even if it retraces, 1824 has to hold. Then we'll now see the continuation. So that settles it. Don't worry. We'll be there next week to guide and share charts with everybody.
Thank you.
Thank you very much.
Thank you everybody for taking your time to attend. Wish you all a blessed and wonderful week and trading week ahead. Thank you.